There's a lot of chatter as well about the Singaporean dollar, not maybe against the US dollar, but just against the rest of the basket being a little bit of a safe haven play. It's taking a little bit of Japan's thunder, the yen's thunder when it comes to that respect. Is that something that you're trading as well?
Yeah, definitely. We do like the Sing near higher against the basket of currencies, and that's because unlike the Bank of Japan, which manages its interest rates to control inflation, the Singapore Central Bank, the MAS, basically uses the currency as a way to hedge inflation. So as inflation in Singapore continues to rise, we think that the MAS is going to tighten again in October, which means that Sing near should automatically basically continue appreciating against the basket currencies. So everything against the US dollar, the Singapore dollar should probably get stronger.
Speaking of movement, I have to ask you about the yuan. A lot of people are thinking the 7 handle is going to get broken. Is that your base case? Do you think it's going to happen sometime soon?
Yeah, so our target for year end is actually 705, and 7 was used to be a red line during the trade war. It was a psychological level everybody focused on, but the fact that it already broke in 2019 and broke again in 2020 because of COVID probably shows you that it's not really a red line for the PBOC the way it used to be. I think the real red line for them is 715. Because at that point, that's when you start getting multi-decade lows in the RMB, right? Last time it was 2008, 2007. So I think in the short term, when they look at China's export outlook, when they look at the growth situation in China because of zero COVID, I think they sort of understand that as the dollar strengthens, it has to go past 7.
Okay. Just finally, I'm going to show a little bit of home bias. The Australian dollar, where are you seeing it over the next 2, 3, 4, 6 months into year end maybe?
Right. So I actually think it's going to probably get lower, probably towards 65 cents to the dollar. And although you do have a lot of strength in the Australian economy, as the jobs numbers show today, everyone sort of looks at Australia as this kind of export play to Chinese growth, right? And Chinese growth is going to remain weak as long as there's zero COVID. You have, other issues in China, power issues, drought issues, domestic demand issues. So as long as the building boom in China remains slow, and it will because of the property headwinds, then overall we think that the Australian exports to China will be slow, and that should pressure the Aussie dollar lower.